Guess what? Everybody's getting a Christmas present. Everybody who has a bond or somebody that is wanting to buy a property, they just got a 0.25 drop on the interest rate. If you add the drop in September, that is 0.5, right? It really makes much of a difference. It really relieves you. But now you might be a buyer, you might be a person who already own a house, and you can be asking yourself, hey, what can I do with this? Right? I'm here to break that down, to say, what do you need to do as a buyer? What do you need to do as a homeowner? Right? Because that will assist you. As you know, in this channel, I am the big elephant, and welcome back to my channel as we speak all things real estate, all things personal finance, so that we empower you to be the driver of your financial life and not just the passenger. So let's get to it, shall we? So you're a homeowner, right? When you're a homeowner, you're asking yourself, okay, I have this bond of $1 million that I have been paying now, and I've been paying a certain amount of installment, and now I just got a present to reduce it. The truth of the matter is, there's a reduction, right, which is a reduction of 0.25, or let's combine it with the September one, which is 0.5. The truth of the matter is, you have been paying already the higher installment, which means that you have the capacity to pay the higher installment, right? So what will benefit you, right, is to continue paying the higher installment that you have been paying all along. Somebody will be asking, why the hell would I do that? Because you cut off interest, and you cut off the number of years it will take you to repay the home loan, and you build equity much faster than compared to when you go with a drop of the 0.25, right? So because what it means is that if there's a drop on the interest rate, it means your installment, your monthly installment goes down. It's vice versa on the other side. If the interest rate increases, then it means your installment also increases. But you've been paying. What's the problem? You've been paying. What's the problem? Oh, wait, before I continue, hey, don't forget to subscribe, Don't forget to subscribe. For those who have subscribed, hey, like that video. Like the video, Like the video. Thank you for that. But if you're a homeowner, like I'm saying, you just continue paying the same way you've been paying. That will help you so much in a long term. And if you have been following this channel, you will know that I am an advocate of building equity much faster. What it means to build equity, it means that you build wealth much faster. But what is equity? I'll put a link on the description so that you are able to understand what equity is. But basically, equity is the amount of money inside the property that actually belongs to you, right? So if you want to maybe sell the property within 5 years, within 2 years, or within 3 years, you want to actually build much more equity so that when you eventually sell that property, you can get much out of the property. You can also refinance that property and get some money out of it, right? That's one of the things. So there's a lot of benefits of building equity at a faster rate. So if I were you, I'll keep paying the installment that I've been paying all along and not reduce, because in a long term, that helps you. Don't be a short-term guy. Be the long-term guy, right? Be the long-term guy, because if you are a short-term guy, you will not build no future for you and for your family, right? Now, that's all I have for people that are already owning their homes, right? The key message is keep paying the installment you've been paying at the maximum interest rate, right? That way you build equity much faster, right? You kill the interest. You reduce the number of years that it will take you to pay that bond. Get that? So now, what do I do as a new guy in the property? And I see there's a home loan drop, interest rate drop. What do? Do I look at buying, or do I forget about buying and keep on renting? The fact of the matter is, the earlier you buy a property, the better, right? Why? Why am I saying that? First thing first, when you continue on renting, right, there is no way to recover that money. I just spoke now about equity. You cannot build equity while you are renting. If the interest rate is dropping, what does that mean to you? It means it means the cost of borrowing becomes lower, right? It means now on a property for $1 million, I'm just throwing in numbers now, but get the principle. If 5 months ago, before the first drop of the interest rate, a property for $1 million, you will pay on a monthly basis, let's say 12,000, right? But now, what it means is that now you can pay 11,000, which means the cost of borrowing is cheaper. So what it means is that you need to buy as soon as possible, right? Because of that reason, the cost of borrowing is much cheaper, right? And when it's cheaper, again, the same principle might apply, that you want to kill the interest at a faster rate. I will also advise you to pay at a higher rate, right? So that you pay that bond at a much faster rate, right? I hope this somehow helps you. As you know, right, we are only in this channel to empower, to educate, to ensure that you are having property solutions that work in your life and you can see the results in your life, right? So don't forget to subscribe on this channel if this video have added some value in your life, and also share with your friends and family. Cheers. I'll see you on the next one.